In today's video, I'm going to share with you 5 reasons why I'm dumping 50K worth of Yieldmax funds. And if you stick around until the end of the video, I'll discuss my plan moving forward to maximize performance. So we earn over 100,000 per year in dividends at this channel, and my performance and value shows that I'm still up 43% for the year. 43%. The S&P is up 15, the Dow's up 4, and the Nasdaq's up 30%. So we're beating all the indexes on a year-to-date basis, living financially free out of our brokerage accounts. If you're interested in doing the same, email me for my e-guides at aikentodd48@gmail.com. When you buy my e-guides, you get free access to my phone number and free access to the Discord chat room for life. So let's go ahead and get into the first point, guys. My first reason for dumping 50K worth of Yieldmax funds is because simply the market's at the highs. That's the first point, okay? If we go to a chart of the SPY, you'll see that it had its pullback recently, and we were shorting at that high. We were up 50% formerly when the S&P was up, and then the SP had its little pullback, and we were buying on those dips. We even bought some Yieldmax funds on those dips. And now the uptrend has resumed, and we're getting back to those highs again. So here are the highs here, okay, where we're up 50%. Then we fell to that purple line, that 100-day moving average, where we were buying hand over fist, and we were chronicling our trades daily here. We were watching the progress of the S&P, and it was a textbook buy here to buy on the 100-day moving average. And now we popped up above that blue line, which is the 50-day moving average. That's a very important moving average. If we can hold that, then that looks bullish. However, again, we're still almost back at those former highs, and the market's up huge this year. So I'm just being prudent, managing risk, and taking some profits. So Yieldmax, as you can see, I mean, we had a fractional gain today. We took profits of about, what does it say here? About $300. So when you sell funds on margin, okay, you want to do so at a gain or a minimal loss so that you don't decay your account and hurt your own net asset value. So, okay, we raised that cash. We also raised a lot of available withdrawal in the process. Okay, the other reason why I'm doing this, the second reason, are because of the dividend cuts. Okay, I know you guys don't want to call the Tesla dividend fluctuation a cut. You just want to say it varies based on the volatility of the underlying stock price. I get that. Okay, Tesla. Okay, this is Tesla, for example. We're down 0.7% in this. We were up 15 or 20% almost in Tesla before the recent correction. And so I'm okay with holding Tesla, for example. Okay, I didn't really pare that back much. As you can see, we still have 10K in it. But I went ahead and let go of 10K Apple. Okay, I let go of 10K Microsoft and Apple. Okay, Apple is next. Okay, I'm waiting to sell Apple on the strength. Okay, so basically I unloaded about 30 to 40K of Yieldmax funds today, and I plan on doing the whole 50, soon. I'm just waiting for more strength to dump half of Apple and half of JPMO, okay? JPMO. I also want to dump some Netflix, okay? NFLY. Here's Netflix down here. We're down 9%. I'm not worried about that. If you go to a chart of Netflix, you'll see that it had a big pullback today. NFLY is just following the underlying in Netflix, and Netflix was down about 5%, as you can see. But the pullback looks kind of constructive. We're here on the 50-day or on the 100-day moving average, this purple line. So I'm not saying that this is a buy, but I'm not going to sell here. I'm going to wait till this pans out, and hopefully I can sell on some strength. I just want to sell, two-thirds of my position in Netflix. I want to get my stock-specific, lower weighted Yieldmax funds like a Netflix, like even an Exxon or a JP Morgan. I want to get those back down to my stock price, my stock sizes of about 1,000 to 1,500. As you can see, in my stocks here, we keep about 1,500 in the stocks because they have headline risk, and you don't want to tie a lot of money to stocks. You want to tie your money to the indexes. That's how you withstand large market downturns, because stocks fall way more than the indexes, and you have to put all your money in things to matter. So when you put all your money in a stock, you could really burn yourself. If you put all your money in the indexes, you can sleep at night, and the drawdowns are less severe. So that's my plan for dumping the rest of the Yieldmax funds. I've already dumped about 30 to 40K, as I said. Look at my margin debt, okay? My margin debt was around 255 yesterday, and now it's at 220. So we've dumped about 35K of Yieldmax funds. I'll alert all those trades on the Discord chat room. So here we'll go to daily portfolio trading recap, and you can see here under the trading strategies, okay, daily portfolio recap. I'll update all those trades in this channel soon after I make this video. That's the second reason, guys, okay? The first reason was the market's approaching highs. I'm simply taking profits and managing risk, okay? The second reason why I'm dumping Yieldmax funds is because the div cuts are a buzzkill on say something like an Apple. I don't mind the Tesla dividend cut, but the Apple dividend cut, it hurts when the dividend's not really much more than Cornerstone, okay? Cornerstone is our 20% dividend holding, and it doesn't change. Okay, that's why I have 500 grand in Cornerstone. But Cornerstone, the difference between Cornerstone and Appley is that Cornerstone has about the same dividend, if not more than Appley, and the maintenance is 30%. So if we go to trade Cornerstone here, for all you newcomers at the channel, if we go to snapshot, you'll see that the margin maintenance requirement is 30%. Now, if you go to some of these Yieldmax funds, you'll see that the margin there is 50%. So let's go to something like Appley, APLY, and you'll see that the margin maintenance requirement here is 50%. So for something so safe like Apple, you would think it'd be 30%, but it's 50%, and that's just not worth the yield. Okay, the yield of around 15% or so, or whatever it is. Even if it's around 20, it just doesn't make sense for me to hold Appley because it has stock-specific risk. As you can see, Appley's struggling. We were up 10% in Appley. Now we're down 10% in Appley. So, I mean, I don't know what the exact numbers we're up on, but we were up significantly in Appley before. And yes, we're collecting dividends, so this number isn't so bad, but I can't wait to sell a half of Appley just because also look at the dividend, the decay. This is my third point, okay? So first point, market's at the highs. Second point, div cuts are a buzzkill when the maintenance is so high, okay? When you can just still get Cornerstone for the 20% dividend with the low maintenance. If you need help understanding maintenance, that's in my margin e-guide. Email me at akentov48@gmail.com if you need help understanding maintenance. So the third reason as we get into this is the decay. The third reason why I'm selling is the decay. Look at the chart of Appley, okay? Look at what it did on a 1 year chart. Okay, it hasn't been out for a long enough time, but we go to the chart here, and I just want to show you something in May. Look at the lows of May. See May? Okay, we're below the lows of May. We're at 19 now, and here are the May lows there at 20. Now go to a chart of Apple. Now everyone's going to be is going to be telling me that they told me that these funds erode. I know that, but at first they were tracking pretty good with the underlying. See here, look at the lows of May for Appley. Okay, here's May, and we're still above those lows for May. So May here, okay, May, okay, right there. Now look at where we're at here. We're not even close to that. We're still way above those May lows in Appley. So I don't like the decay in Appley. In return for, yes, the dividend's okay, around 15 to 20%, but the maintenance is 50%. So for every 100,000 I put in Appley, okay, for every 100,000 of Appley I buy, 50,000 of equity is taken up. This is hard to do. This is a hard sacrifice when you're trying to live financially free out of your brokerage accounts. Maybe you don't want to use margin to trade, as I always say. Some people don't like to trade on margin. They think it's risky, even though my dividends pay back my margin. So I don't understand that. But sometimes people want to, use their margin to buy a house outside of their account, or they want to use their margin to, buy other things because the rates of margin loans are cheap. They're cheaper than credit cards. My rate here is 6% because I negotiated it down. So this, it pays me to use margin, not only for my investments that have nice yields that offset the margin interest, but again, if I want to do any buying outside of my account, I'd rather put it on margin instead of a credit card because the 6% interest is unbeatable there. Also, this doesn't show up on a credit check, so it's good debt. All right, so the fourth reason why I'm getting out of some of these Yieldmax funds is, okay, this is an obvious reason, but they're unproven, okay? So I know Appley would be fine. I'm sure Appley will pick up in performance as the stock price of Apple picks up in performance, but for right now, that maintenance is too high. I like Yieldmax funds. I like everything about them, but the decay is a lot. The yield isn't so great for the decay and for the high maintenance in some of these names. I'm not saying all of the Yieldmax names. So that's the fourth reason, is they're unproven, okay? So the fifth reason is kind of tied into my other reason of decay, and that's just look, I have these written down. Okay, the first reason, market's approaching highs again, so I'm simply taking risk and managing risk and taking profits. Okay, the second reason is the dividend cuts are a buzzkill compared to the steadiness and snowballing effect of CLM dividends. Okay. The third reason is the high maintenance hurts when in heavy amounts. So if you have too much Yieldmax funds on, I had about 150K of Yieldmax funds on, the 50% maintenance is taking over 75K of my equity. Okay, that's just a little too much for me. Okay, and maybe you guys should consider looking at that as well. I mean, maybe if you're in interactive brokers, you know, your equity is a lot higher because the maintenance is lower. But at E-Trade, these Yieldmax funds are 50%. Okay, so if you're going to go with a 15 to 20% yield, why not explore Cornerstone or IEP? Cornerstone, for all you guys who don't know, again, it has 30% maintenance, but it also has this special drip. So it's the best investment vehicle around. I can't find anything better. $8 market price, and here it is. And if you don't want to hear about Cornerstone, please just skip ahead of this point. So $6.49, that's the drip. I drip at the NAV every month. The 20% dividend in Cornerstone is dripped at the NAV for a 26% gain there every month. 63, 23%. 652, 25%. 642, 27%. And then 627 down here, a 31% gain. So you get these thousands of dollars in drip gains per month, okay, on top of your 20% dividend, and you get days gains potential. The only reason why Cornerstone was down today more than the market is because the ex-dividend date is approaching. So you're going to see, this is, okay, we're down 0.66 today when the market was the Dow was down 0.2 and the rest of the market was up fractionally. Usually we're beating the market on a day-to-day basis. That's why our performance is so high. But around the X dates, Cornerstone has its X date tomorrow, you're going to see these fluctuations in stock prices and you're going to see drops in your account. The same goes for Yieldmax. When they have dividends, they drop by that equivalent amount. When Cornerstone has its dividend date, it drops by that equivalent amount. So there's nothing unusual here. Okay, but those are the 5 reasons why I'm dumping dumping these Yieldmax funds, okay? Because the decay is too bad for me. They're unproven. The high maintenance hurts. The dividend cuts are a buzzkill. Comparing them to Cornerstone and the steadiness of those dividends and the low maintenance of Cornerstone. And then the market's approaching highs. So I'm simply taking profits and managing risk. Going forward, okay, I hope you've stuck with me long enough to hear this next part of the video. Going forward, this is how we plan to maximize performance, okay? I've already raised about 10K equity, as you can see, and I'm going to raise another 10 when we dump Aptly, and half of Aptly, I'm going to sell 10K OARC, I'm going to sell 10K Aptly, and I'm going to sell about 5K of JP Morgan and Netflix. Okay, I'm gonna pare back some of these Yieldmax names because the dividends aren't high enough for the maintenance that I'm seeing here. So and of course Yieldmax, you know, they're shiny new products. I want to buy these things as they come out, but you know, when reality sets in, you know, you have to look at the maintenance, the decay, and the yield. And you know, are you really getting that perfect balance with some of these names? I get it with Tesla, I get it with Nvidia, 50% maintenance, but a 50% dividend. Okay, and it has extreme growth, so you're going to get best of both worlds, capital gains and performance, capital gains and dividends. I get that, but for JP Morgan, Exxon, Apple, even OARC, okay, I'm starting to feel a little bit of aggravation when I look at those yields that I'm receiving compared to the equity that it's sucking up. Okay, remember, I want to live financially free out of my brokerage account. I have to have this equity number high at all times if I want to live financially free out of my brokerage account. I have to be able to factor in 10% corrections. Okay, can we do 500,000 plus 200,000 in debt? Let's just say 700,000. What's a 10% correction? 70,000. What's a 20% correction? 140,000. If I'm talking too fast, slow down the video or pause or rewind. Okay, so 20%. I'm at 140 down in my account, so I would still have 60K available for withdrawal. I would not be close to a margin call. If a 20% correction were to come over the course of a year, then my 20% dividend in Cornerstone pays that back and we break even. Okay. If we have a 20% correction in a month, then my put options make a killing and I clean up on that end. So I'm not worried about corrections, but you have to keep this available for withdrawal number high if you want to withstand corrections and if you just want to withdraw out of your account. Again, you don't want to trade on margin necessarily, fine, but you might want to withdraw out of it. So you have to keep this available for withdrawal number high. These maintenance numbers on Yieldmax funds sucks up half of your equity when you're at E-Trade. So here's the plan going forward. I already sold 10K, raised 10K of equity, and I'm going to raise another about 15 soon when I sell 10K OARC, 10K Appley, and 5K of Netflix and JP Morgan. Okay, I also sold the lowest yielding names to preserve my income. Okay, I sold the lowest yielding names, so my income is still high. We're still making over 10 grand a month. In fact, this 124 number, it's not even registering all my other dividends from Yieldmax, so that should be around 132 when it's all said and done. So we're still clearing about 11,000 a month in dividends, minus my 1,000 in interest. So we're clearing about 10,000 in equity every month. Okay, so we're still strong. We're still positioned to benefit going forward with dividends and capital gains. Because capital gains, we get that from Cornerstone, from the premiums you get. Cornerstone averages 30% premiums per year. Okay, that's how I'm getting those large drip gains. Okay, so I'm still going to get my capital gains, and you're going to get some capital gains from Yieldmax funds as they move higher. Okay, if they move higher. Cornerstone will move higher because it's the market. You don't know what stocks will do. That's why I like to put all my money in Cornerstone. It is the index. CLM is the S&P, and CRF is the NASDAQ, and they are 4-star funds. CRF is a 5-star fund here, as you can see, and it's beating all the indexes as you see there. So I'm going to continue to focus on Cornerstone because that's where we're getting the steady dividends and performance, the 30% premiums plus. Okay, some years they give you 50% premiums. Okay, so I'm still earning over 10K a month, and also, okay, I'm going to start redeploying funds back into Fangu. Okay, so Fangu is our Yieldmax ETF. It's like a cheat to get around the Yieldmax decay. Okay, Fangu, I've already added back 1,500 today, but beware that Fangu is 100% maintenance. If we go to trade Fangu, it also has some leverage because it's a leveraged ETN. But if you look at the snapshot, the maintenance here is 100%. So I'm only going to put 5 to 10K in Fangu because that's going to take up 5 to 10K of my equity. Okay, again, if you need help understanding maintenance, that's in my margin e-guide. All right, so that's the plan, to still have our dividends, okay, with Cornerstone and Yieldmax, and still get our performance with the Cornerstone premiums and Fangu gains, okay, because Fangu will really help us get more capital gains. All right, now the key to playing Cornerstone, just in case you ask these questions on the YouTube chat, on the YouTube comment section, you need to learn how to play Cornerstone properly, and every year closed-end funds have rights offerings. So Cornerstone is no different. So when you go to Cornerstone here, this is where we alert of the rights offering. So the stock is going to drop precipitously when they have the rights offering announcement. That's why the chart looks bad on E-Trade or Portfolio Visualizer. But when you go to Morningstar, you see a different picture there. You see that the chart of Cornerstone is moving upward, left to right. That's because you have to factor back in the drips, factor back in the dividends, okay? And you have to play the rights offering correctly. That's where you reset your 20% dividend, okay? So people are like, well, they keep cutting dividends. You have to reset it after the rights offering. People say, well, it goes down in stock on the chart. Well, that's because you got to factor in drips and dividends, okay? So we alert you of that. In the Cornerstone chat room here on the channel in Discord, we have hundreds of members here in Discord who have read the e-guides and are watching Cornerstone and are looking to do the same thing. They're trying to play the rights offering properly because it's the only thing that stands in the way between us and financial freedom, in my opinion, okay? So we also have a drip channel here for Cornerstone. If you want to know who has the best drips, which brokerages have that, all of the members here at Discord can share their unique experiences with you as far as who does the drip. And there's plenty of other channels here, including my daily portfolio recap, which I already showed you before. That's where I track my portfolio every day when I'm not making videos on YouTube. All right, so that'll do it for the video, guys, okay? The 5 reasons why I'm selling Yieldmax funds, you can review them in the video. I've said them plenty of times. And then going forward, all right, I've told you how I'm going to preserve my dividends and keep the capital gains coming with performance through Fangu and through the premiums from Cornerstone. So I hope you liked the video. If you liked it, click like or subscribe. Please leave comments in the section below if you have any conflicting arguments on what I should be doing or what we should all be doing in our portfolios for Yieldmax and Cornerstone, okay? And I'll talk to you soon. Thanks.